Good morning, guys. Welcome to Monday, January 5th, 2026. So we're starting off the new year. The first trading day was Friday. It was a little choppy day. It ended up with some weakness. And right now, the overnight looks pretty good. Then we had some action over the weekend. If you don't pay attention to the news, you should. A lot of action going on there about the Venezuela situation. It's nothing really. It may impact the oil stocks for a bit, but otherwise, I wouldn't expect a lot of political or market interaction or market impact of that. That's more of a macro or like a geopolitical thing, not a macro thing, but a geopolitical thing. So at this point, we're looking at the first trading day. That was a pretty good move to the downside on that guy. They ran it hard to the downside, and then they kind of was building value to the lower end of the range. Now we're back up again, and looking at the ES, we are kind of right back to in that upper range again, kind of. Now that's kind of on the cusp here, but it looks like they are definitely not full throated continuation to the downside. So I thought on the Friday felt very much like tax loss, tax profit selling, not loss selling, tax profit selling, where they said take their profits for the year. That could still be continuing, by the way. I don't know if that's quite over yet. But we've got a few dynamics going on. Beginning of the year is always interesting to see how things going to shake out. Sometimes you get these nice little rally the first few days, and then you just tank it afterwards. Sometimes it just varies. And every time I try to figure that out, it's you just have to take a step back and let the market show you what it's going to do, and you kind of trade accordingly. Your stock portfolio is a different story. That we had to kind of make some decisions on. We should have already, by the way. So anyway, looking at the ES right now, we're backing off low. We have basically this whole area of value we were trading in on Friday. They sold off pretty good. They backed down into this lower range again. They were trading below that 68.90 for a bit, all the way down to the 68.70 for a bit before they retraced. So they were all the way back down in this lower distribution. Overnight, they nice little rally going into the close, and then basically overnight has been trading back up again into this prior distribution. So I'm going to be modestly optimistic. We'll see. This is kind of a wait and see thing. I'm going to start off pretty much range bound, looking to buy weakness, sell strength in the first few levels, and then we'll see if we get the directional move come out of this. So that's the way I'm going to approach this, kind of figuring out that in the market, tell me kind of what the mood is going into this year. From an economic perspective, earnings perspective, I think it's going to be a great year. It's going to be to the upside, but if the market is going to follow suit is the big question. But good earnings means the market is likely to trade higher. But there's a lot of cross currents which potentially could kick in. So starting off this year, going to be right now range bound. Looking to buy weakness against the 69.10s, 6900s, 68.90s. Looking to sell strength 69.25, 69.35, 69.50s. So those are the levels I'm looking at right now. Short term, near the range, 3 levels up, 3 levels down. If it starts taking out the 69.50s, we're going to be back up here again. This is the mode of this prior distribution right here at the 69.50. If they start taking that out, start trading higher, we may find ourselves right back in the rally again. Or if we start seeing some selling going into January, which is more than just little profit taking, we're going to see them take out this bigger mode here at the 68.80s. And if that starts happening, I think we are going to be in a little bit of a problem here. So 68.90s would be lower, and I would initially look to buy against as a range bound market. If they start taking that out and they start taking out this lower area, that's when you start thinking about really, okay, hey, what's going on with this? So they start taking out this low here at 68.80. That would be that mode, and lower. And I think we are in for a little bit of selling at that point. It may be a little bit too early to say yet, though. It depends on. You also have to assess how volatile it's going to get. If it's a lot of volatility kicking in, I mean, people are going to come back to work pretty much after if they're taking their breaks and days off and all that stuff. So it may be a few days for the whole thing to settle in, but I'm going to be starting off this range bound. I'm going to buy against that 69.10, 6900, 68.90s. I'm going to sell against the 69.25s, 35s up to the 50s for rotations down. And then outside of that, we'll start thinking about the potential directional move. And as I said, the bigger concern right now is if they start taking out lows and we start seeing weakness developing. Because right now, if you can see in the bigger picture, it's not. It is a longer time frame. So you're looking at from October backing off. Yeah, we are back up here beginning of the year, retesting, taking out a little bit on the upside. This could be a retest failure setting up in a bigger way, and that would be if that is a retest failure which is failing. I would be looking at a lot bigger pullback than just a little bit. It's going to be like 5-10% of a pullback. But this is potentially a long-term retest failure setting up. But right now, I'm just going to trade the short-term part of it and just keep that in the back of my head. If you start taking out this whole blob of volume and you start seeing them trade below that 68 to 25, that I think that confirms the direction to the downside. So that's kind of the way I'm looking at it. You have this whole area between 6,800 and 68.25, and that whole area comes out. I think we are in for a little bit move to the downside. But it could still be a pretty good directional move into this lower range or running it up here to test the high. So we'll take it as we see it. So starting off range bound, looking to trade those near ranges to get started, and then we're looking for a potential directional move from there. On the Nasdaq, capital flow wise, they kind of not by any means they could never get up here in this upper area again. They kind of that 525, 860 to 900 has been proven to be a pretty hard resistance area. So and support down here in this congestion area about the 300 to 350 has been holding pretty good. There have been pretty good probes to the downside as well. But so far that's been holding. So I would be looking at pretty much the same approach there, range bound trading. Initially looking to sell strength, 580s, 630s up to the 680s. That little mode there. Looking to buy weakness against the 500s, 450s down to that level, the 400s. So 3 levels up, 3 levels down, pretty much the same approach. And then let's see if this sell-off we had on Friday gets any legs, or that's just a precursor of something bigger coming. So I will say it's at this point, beginning of January, it's always a lot of little choppiness going on. But you have new money coming into the 401ks, you have a little tax profit selling, and you have a whole new year ahead of us. We'll see what the fund managers think about things. I heard a few of them talk about potential. Are they all expecting a big correction and sharpness in the first part of the year? Well, it may be true. And we'll have to wait and see. Either way, on the future side of it, we can just trade either direction, so it doesn't matter. The stock portfolio side, a little bit more, a little bit trickier on that one. If you're going to take some profits or sit through it, or what you're going to do. But I would say below the 400s here, I would be thinking about the short side. And they start taking out these lower edges at the 300s. And that would be basically right back down into this low range again. You see this big congestion area right there. We were down there pretty good on Friday. But if they take that whole area out, I mean, again, we are in for a little move to the downside here. But they've been churning here for quite a bit, a lot of volatility on this. You can see here on the F1 how choppy it's been, how many rotations we've been getting going in from October, November into the last part of the year. And interesting though is from October, November, we had a few pullbacks, but a pretty good rally right up here going into that beginning of November. Then November, the Santa rally. He didn't quite material. Got 3 days, a little bit of buying going in right into Christmas, but that was it. Not by any means a spectacular Santa rally. If anything, it was like massively disappointing. So starting off range bound, looking to buy weakness at 500s, the 460s down to the 400s, looking to sell strength, 580s, 630s, 680s rotations down, and then we'll see if they can trade up above these upper areas. I would probably wait for them to take out the 730s because before I start getting excited about the long side, this little area around that mode. But it's definitely it may start looking at the long from the long side of this, and same thing on the way down. You could still get, I mean, as you see here, up to that 790s. That is up against these upper areas. Here you as you approach this upper area, you're going to run into some heavy duty resistance. So any of these areas on the way up could potentially hold. But if they manage to bust through that 870, then we have a potential move to the upside, at hand. But right now, I'm going to start off at a pretty narrow range, and then I'll see if we get some directional move up or down. And just to emphasize, I mean, they start taking out that 400. They're still buying opportunities on the way down. I'm just not going to be that aggressive about it. It's going to be probably more trying to trade the short side. And on the way up, if you start taking out that 680s, probably start thinking about the long side and start looking to buy pullbacks. See if you start trading from the long side of the market, and still look and be mindful that you still have pretty good resistance ahead of you. Just have to be mindful that you don't buy into resistance or sell into support. That is usually the bigger issues. All right, so those are the ES and NASDAQ. I didn't touch too much on news. We don't have much news today. We only have the ISM manufacturing coming out at 10, I think at 8:30. So 10 o'clock we get ISM manufacturing. Tomorrow, PMI composite at 9:45. But latter part of the week we get more news, and then of course we have an employment situation coming out on Friday. So you know that. So we employment Friday, that could potentially move the market at that point. We'll see. Finally, on the bond side of things, Friday's trading on the bond was kind of interesting. Not an easy one, but right now we are still pretty much trading in the range. It's as I've been saying for the last long period of time. It's as we are trading in this chunk of time, really going back and forth, slowly filling out this area. So I'm just looking at them rotating between the 150, 114, 15, 16 up to that 117. So that's the main range. I'm thinking range bound trading still, and if they for some reason trade out of it, yeah, then I'll start thinking more directionally on the bonds. But right now, in the short term, I'm just going to be range bound on this guy. The range for the days has been half a point to a point, so not a lot of range on the bonds. Some will call it pretty dead, but given the tick size and the fact that if you can get a good setup and be patient, it could be a nice payout. So worth looking at. But I would start off range bound. I'm going to buy weakness against the 1430 to 115s, 1424s, 16 to 18. Looking to sell strength against the 1510s, 1516s, 1526s for rotations back down again. So pretty much a range bound market starting off like that to see how this whole thing develops. But watching the bonds too. We want the long-term yields to kind of come down a bit. So if the bond prices start, you want the bond prices to trade up a little bit so the yields can pull back a little bit. But we'll have to wait and see. So that's the bonds, range bound trading on that guy. Getting into the bond open right now, trading back down into this lower range. But as I said, a few times you have to just be patient and look for the setup. I told you about what kind of setup I'm looking for. And yes, if you want to trade the bonds, yes, had to be a lot slower in how aggressive you are than if you trade the ES and the Nasdaq. All right, so that is the starting point. I'm gonna wrap it there for now. So I'm gonna say good trading. This second trading day of the year, and let's see how this whole thing shakes out. So good trading, guys. And let's start off this new year. Make it a great 26. All right, guys. Later.